It's not a one size fit all, but if you look at the infinite banking, kind of the concept, how Nelson Nash talks about it, it's based on the whole life, and that's because of that guaranteed portion.
Hi, everyone. Welcome to this episode of the Immigrant Doctor podcast. I have with me Madhavi Natejain. We met through another mastermind, where I've met a lot of other folks that have come to my podcast before. And she is an amazing person. She is fairly successful in what she does. We started talking and we were discussing about this concept called infinite banking. I was already familiar with this concept and, I was kind of setting that up for myself. And I figured that would be a good concept to talk about and to discuss on this podcast, just so that you can understand and learn what exactly is infinite banking and how you can leverage this to grow your wealth and to grow your generational wealth. I'm sure a lot of you have heard of life insurance, and a lot of you have heard of wasted money that is spent on setting up a life insurance and how it may not be worth your time. But this is sort of talking about life insurance from a different concept and a different way. What I'll do is I'll let Madhavi introduce herself. We'll dive into her journey, and then we'll talk about infinite banking. So welcome, Madhavi. How are you doing?
I'm doing great. Thank you so much for welcoming me to your show, Avishkar. Immigrant Doctor MD. That's very, very interesting. Having an immigrant journey myself, as you know, and many of our listeners possibly are, this is a quite interesting journey. We come to this country completely different upbringing, right? And there are so many things that happen in this country, and you are mentioning about infinite banking. That's one of the things that I uncovered, and like you uncovered many other aspects like real estate syndications, right? So
Right.
yes, I'm excited to talk about it. And you asked about my introduction. So I actually have a boutique private investment company called Think Outside the Stocks. And Think Outside the Stocks, as the name suggests, is outside the stocks, but also
Right.
outside the box strategies. So I'm looking at, implementing that 20% of strategies, which can make 80% impact to families that are coming in my contact. So that's really what drives me. I'm here to change the financial trajectory of one family at a time and thousands more to go. And with that, the infinite banking and the real estate syndication, I use that hand in hand. A little bit about my journey. Like you, I came to this country with two suitcases and probably a couple of hundred converted dollars, and went through that, for me, that H4 to H1 transformation, working with the top five consulting company, and then taking a corporate break. Well, I had to pull that plug, so I didn't really plan my journey per se, but that gave me an opportunity to start my financial freedom as a need in a reverse way. And that's when I actually started in real estate syndications, and I accidentally came about knowing infinite banking. Now, infinite banking, when I heard that word, quite intriguing, right? I'm sure that when you heard it for the
Yeah.
first time, it was like, okay, what does it really mean? Right?
Yeah.
So, yeah.
The first time I heard about life insurance was when I was in India, actually, and somebody was
Uh-huh.
trying to sell me what's called a ULIP. And I actually bought that
Yes.
ULIP. Later on, I realized that when I bought the ULIP, the returns were very muted compared to what the stock market would return. And so my notion always was about life insurance being a waste of money, muted returns. You can
Absolutely.
invest your money elsewhere, you'll get better returns. And, of course, when you're searching finances, I stumbled upon infinite banking. I did some research on this, and I'm so glad that, we're going to discuss about this. But before we dive into this, what really made you kind of go in the direction of infinite banking, so that you kind of took this on as a passion project?
Absolutely. So here's the thing, Avishkar, when you are thinking about being skeptical about life insurance and infinite banking, guess what? You are not alone. I was skeptical too. I think, biggest skeptical of this system because there is the word, the life insurance tied around it. I thought that, hey, nothing good can come out of life insurance, right? So I was thinking that this product is not right, or whatever they're trying to sell is not right. And when I get skeptical, I don't just sit hands on hands. I go back to my numbers. I'm a very numbers person. I'm sure that the numbers is in our DNA, whether you're a doctor or engineer. We have that in our DNA. So I went back to my spreadsheets, my scenarios, and I kind of tried to disprove the concept. And at the end, I actually ended up proving it. And when I saw that, and I had like a few aha moments, I can share that with you today. But that it made me realize that life insurance is like, the chassis that is kind of the machine that we are using, and the chassis is completely different. It's like how Model 3 and Model Y are, right? The Model 3 is the same machine, but Model Y is much bigger. So you use the life insurance because it does certain things. So you want to kind of utilize that. It creates that cash value system, and that you can utilize to create your own bank. Now you have your own bank, you have a bigger, better car for yourself, and now you can implement it, use it for multiple purposes. So when I realized that, I was like, oh my God, nobody has explained it to me like this before. And if you ask me truly, Avishkar, education is my passion. I get very, very passionate and excited when I'm educating someone. So I thought to myself, hey, I created this system simply to understand what it can do for me. Now I can utilize the entire system to educate someone else who wants to learn more about it. And
Right.
life insurance, the bad name, it gets because there's a lot of commission structure that's behind it, and that's why there is that pushy salesmanship, right? It's almost like a car salesmanship that
Right.
we look at. So I don't know about you, but there used to be time we see a friend, a life insurance agent. You turn around the corner and like, okay, we don't want to see that person today,
Yeah,
right?
that's true. That is true.
Yeah, so
Yeah.
that was it. So
So,
essentially, I
so what?
created
Yeah,
this.
let's. Sorry, finish what you're saying, and then we'll talk about what exactly is infinite banking. I think we're creating this whole story behind this infinite banking, but I think we should dive into what exactly it is. But I'll let you finish what you were saying, and then let's just dive into that.
Yeah, absolutely. So I was just trying to say that, when I actually figured out that I have the education, I'm very driven by the value system, right? So my focus is, here is the education, here is what it can do for you, here is how you can utilize it. Now, at least you know about this system which has been utilized for hundreds of years, and wealthy of this country have been utilizing it. So at least now you know about the system. And the second system, the value system that I have, that I don't like to push at all. I'm like, these are your facts. You make that decision whether you want this to happen in your life or not. So when you
Right.
kind of leave that to people, they look at it, and they look at all the scenarios that's presented, the education that's presented, and if they think that's right, I'm here to help to very strategically implement for it. So that was my next problem. I learned about it, I know about it. Now where do I find a person who is not involved in the commission structure as much, but involved into what's right for me? And that's what I wanted to provide to people, that okay, based on your scenario, because everyone's scenario is different, I could do that for you. So if you want to do that, I'm here to help. If you don't want to do that, hey, you got to know about one thing that is completely out of the box, that could change your perspective of looking at things completely, and your life. It's a bigger impact to the life. Typically when people come to me, and I do have that real estate syndication, that second fold, right? So I look at the banking being the savings aspect of it, and the real estate syndication being the investing approach of it. People typically come to me and they said that, oh, Madhvi, what next investments that you have? What's the returns? What's the annualized returns? What's some equity multiple, etc.? That's looking at from a frog's perspective in a pond. So I say that, why don't you just go a little bit higher up from eagle's perspective? Instead of focusing on just your returns and possibly financial freedom, think about now from eagle's perspective to grow, preserve, protect, and pass your generational wealth. And that's where the infinite banking structure fits in the financial structure. And that's essentially what I try to explain.
Amazing, amazing. I think we're talking about life insurance, and then we're talking about banking, and they're two different sort of things, and we're trying to tie this together. So let's talk about what exactly is infinite banking, and let's just kind of remove the curtains and talk really about what exactly it is, how it's structured, and how people leverage it to their benefit.
Absolutely. And before we actually do that, let's talk about some foundational principles of the infinite banking, because that's really important to understand what infinite
Right.
banking is. So the two foundational principles I often talk about is one is look at your financial structure. And I often like to look at it from the pyramid structure perspective, right? So the pyramid has, solid foundation, almost like our home, right? Our home has a concrete foundation, and then everything is built on the top. That's not concrete. We use a mix of like wood and different stuff, and it goes
Right.
to the roof, right? Your financial structure needs to be like that, right? The solid foundations, the foundation like a concrete, should never budge. It should have its protection. It should have a kind of a guaranteed growth. It's growing. It should not have any risk. So zero risk at your foundation. Now as you're going up, your kind of risk goes up, your control goes down, and might be your returns too. But the infinite banking kind of lays at that foundation. It provides you protection two ways. It provides you protection for your savings money. So we're talking about the money that typically you will put it into the banking system, the FDIC insured, or whatever you feel that is safe, that, hey, it's at least I'm not losing my money. This is the money. This is my emergency money for my family. If something happens to me, if my job is lost, it'll survive me for 3 to 6 months of my expenses. So we're talking about that money. So that distinction is really, really important here, that we are talking about your savings money, which you typically put it into the banking institute, right? And at the same time, it's foundational. You don't want to lose that money. By the way, banking has, the inflation is eroding that money. So that's another problem with banking. We think it's not eroding money, but in a way, it is eroding that money. The second foundational principle is that you have that protection. You need to have your protection on your life too. And that's where the life insurance kind of comes in the picture. Because believe it or not, you are your biggest asset. We don't protect our biggest asset. We protect it for a temporary basis with the term life. And we have, America has been brainwashed with buy term and invest the rest. And we will challenge that thought in a minute here. But you are your biggest asset, and your savings money, this should be protected in that foundation. So that's number one principle. And the second principle is the magic of compounding, actually. Compounding, as Einstein says that one who understands it earns it, one who doesn't pays for it. So compounding, we think that we understand compounding really well. It's just that interest sitting on the principal is going up, 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 and up. How many times do we utilize it? We don't. And infinite banking system is about utilizing that compounding. You put it in a system, you put it in the growth uninterrupted. So say you're putting $1,000 away every month. In 30 years, if it is earning 6% compounding, you can have $1 million in your bank account. So now in that growth period, you will say, Madhvi, but I need to utilize that money. So now you think like bank, you have the money in the bank. What does bank do when you put your money in the bank? Bank give them out as a leverage to other people. They really don't put that cash in there, right? They give out the leverage. So now you have your money compounding uninterrupted is the key word for compounding, right? Uninterrupted compounding inside the infinite banking system. And now, if you want to utilize this money for any purpose, literally any purpose, whether you want to invest from it, whether you want to use it for kids' education, whether you want to even do it for your retirement income, now you do the leverage, that is, you borrow from it, utilize it wherever you want, and let this compounded grow happen till the end of life. And now you can pass this as a generational wealth, income tax free, to your next generation. So these are the two foundations of it. One is that pyramid structure, that your foundation needs protection for your savings money, for your life. And the second foundation is the foundation of the compounding interest, uninterrupted compounding growth consistently throughout your life. And while you're living it, now you can utilize this entire system. Though it's life insurance, it's called life insurance, not death insurance. You utilize this money throughout your life, and in a way, you live your life insurance. The life insurance doesn't just become a death benefit, money that you'll never ever see.
All right, guys, if you haven't done already, please go check out my free video series on how to do due diligence on operators and on deals before investing in them. It's called Real Estate RX for Passive Investors, and it's available at www.rerxcourse.com. Right. I think there are some nuances to this as well. And, when I was talking to my financial advisor, it almost took me 2 months or 3 months to set it up with him, because I had to actually explain the concept to him. Then he had to find an insurance provider who would actually cater to my specific needs of setting it up. And I think a lot of times people may not realize it or understand it, that there are certain structures that are set into a life insurance when you're setting it up for infinite banking. And so it's very customized, and it's highly unique to the person that it's being set up for. And I think let's just dive into it a little deeper. But, I want to start first by talking about the types of life insurance itself. I'm sure when people go to purchase life insurance, they come across terms like IUL, VUL, whole life, and of course there's term insurance. Let's just talk about what these are and how to choose one over the other.
Absolutely, and a great question, Avishkar, because this is quite a problem, right? When it comes to the infinite banking, as Nelson Nash talks about it, is set up with every word I'm going to say is very, very important. It's set up with a whole life insurance product, which is with mutual company, which is dividend paying and properly structured. This is really, really important. So anything that you have talked about, the different type of insurance, let's talk about them. The term life is almost like renting a house, that you never contribute to the mortgage, you never contribute to the equity of the house. If you say, pay 5,000 for 30 years, that entire money is down the drain. You're not going to see any dollar back from it. With a whole life insurance, what starts happening is when you provide the premium to the life insurance company, there are two kind of guarantees to it, that your premium will not go up, and your death benefit, no matter when you die, you will get that death benefit. So if you start putting it, say $7,000 every year, and you get $1 million benefit, that's your typical life insurance. The second word that I said when I was saying the every word was important is properly structured, right? So a typical life insurance, and not many life insurance agents actually understand the infinite banking concept too. This is the way they will structure. Say about $7,000 life insurance going towards, and you have that $1 million death benefit, even if you die, say at age of 90. Now, as a characteristic, what starts happening, it starts creating cash value. The first few years, it will have zero cash value, but it slowly starts increasing that. And as much as the premium that you paid into it, you kind of have the similar cash value in about 17, 18 years. That's what I call the break-even point of a life insurance, right? So that's what typically happens. Now, this is structured for a life insurance. Remember, I was talking about the Model 3. So this is the Model 3 of the life insurance. Right. How do we make it Model Y, right? So now let's talk about it. So what happens is now this dividend-paying life insurance, it comes in, and every year insurance company sees that cash value and they pay dividend based on that. So the first years when you have zero cash value, there is, like not significant dividend coming in. You have more expenses on your policy. Now we flip that switch, and now we kind of push more money. Now you say, for example, you're just putting away about 30,000 in your bank account, in your savings account. Now instead of it sitting there, you put it into your banking system, and you pump your cash value to the maximum level it is possible in the first year itself. Now the next year, the insurance company is going to see that, give you that more dividend based on the cash value that's sitting here. And what break-even point, that is the amount of premium that you paid into it, equals to the cash value sitting in it, which was supposed to happen in the Model 3 version in 17, 18 years. Now we can make it happen at least 10 years earlier. Right. So that's the premise of it. Now IUL and VUL, that's very interesting. Let's talk about that. This is a dividend paying. The dividend paying has guaranteed portion, and there is a dividend portion in it. 3.5% is the guaranteed into it, right? The last year, one of the companies that I work with, they gave 5.75% total dividend. So
Wow.
3.5% plus some extra, right? So this is having a consistent dividend paying history. You are a mutual kind of a partner. That's the reason you're getting that dividend. IUL and VUL, now this is what happened that, typically life insurance means you taking your risk of your life to the basics, right? And giving it to the insurance company at the cost of the premium. I'm saying that, hey, insurance company, this is my premium. I don't want to carry the risk of life insurance. Please take it. And if something happens to me, pay my family.
Right.
Similar to the health insurance or auto insurance or anything, right?
Absolutely. Yep.
Now the IULs and the VULs, anything that's indexed, that is interesting. Now you are tying that risk to the stock market.
Right.
And whose
Just for
performance?
listeners, yeah, just for listeners, IUL is Index Universal Life and VUL is Variable Universal Life. Sorry to interrupt you, but let's go on and talk about this.
Yes, thank you so much for clarifying that. So now what's happening is now you are tying it to the indexes. So your performance is based on the stock market performance. And of course, there is a floor. Of course, there is a cap. There is kind of a performance in a way, and I'll explain it to you a little bit. Based on the jumping of the stock market indexes that you have picked into these insurance policies, now they will pay you based on whatever that criteria was mentioned, right, inside the policy. Now, where is that risk? You took that risk from the company, the insurance company, you took it back in your bucket, and now you tied to the insurance, to the stock market, right? And
Right.
that's why that fluctuation is not right for you. They say typically that zero is a floor, but the year that is zero, your cost of insurance still has to come from somewhere. The
Right.
insurance structure in IUL is a term, it's a renewable term, so it's getting expensive every year. And especially when you're in your 70s and 75, something like that, your insurance cost is really, really higher. So if it has not performed at that time, the guaranteed tables in any of the index universal VUL, you will see that the guaranteed table going down to zero for cash value and zero for death benefit. So if it is not done very, very well, or it does not perform in a certain way, it can go to zero. But if you look at the guarantees of the whole life product, dividend paying, it never goes back to zero. In fact, if it goes to 100, 200, from 100 to 200, your 200 is safe. It goes to from 200 to 500, your 500 is safe. It does not go back. And that's why I was mentioning about the two foundation, the pyramid structure and the concrete foundation being the infinite banking. This is exactly why I say that this is a dividend paying, has guarantees. There is no depletion occurring for your money, and your life is protected no matter when you die. And that's why it's really, really important to do it in a whole life dividend paying product with mutual companies, not stock companies, because mutual companies now, they exist for over hundreds of years. 150, 180, even 200 years. I work with different companies. I'm not captive or tied to any particular company. These companies go way back. And if you look at the dividend kind of a history of these companies, they have been providing consistent dividend year after year. So they really, there's a very less likely chance of them just doing that guaranteed portion and not the dividend portion of it.